Good evening, everyone. Welcome to Ask Grit, episode number 46. We come to you live every single week, either Thursday or Friday. We couldn't do it yesterday, so hence why we are here today at 5 p.m. Australian Eastern Standard Time. Here we have Saranga. Welcome, Saranga.
Hi guys, hi Naveen. Good to be here.
Fantastic. Yeah, so every single week we go through this, we answer some of the questions we get from our own investors, and we get those questions asked by our own team members, where we provide answers so that it will add some value to you. That's the whole purpose of this session. We to keep it very short, at least 10-15 minutes, so that it is short and sweet. Hopefully you can take away some golden nuggets at the end. All right. What have you got, Taranga, today?
Yeah, we've received a few questions from all over the place, actually, around Australia. But main focus has been, I guess, with the COVID restrictions now being relaxed, people are sort of, wanting to know what's going to happen with the market, because once the restrictions came in place, what we saw that there was a shift in people wanting to move into outskirts.
Yeah.
In terms of house and land versus apartments, what do you see? Do you see that something, one will perform better than the other, or what do you expect to happen in that area?
Right now, as you said, students are back, people are moving in, tourists are in. So the drastic change is the rentals have come back to normal. Especially in the city or inner city, the rents were hammered for the past 6 to 12 months because of COVID. There was no students in place and there was no tourists in place. So now we see the rental markets have come up. There's a huge demand for rentals. Statistically, vacancy rates have been about 11.2%, and it's down to below 2%, which shows a drastic shift. And also the Airbnb side of things has gone up. They are back up again because tourists are coming in, interstate travelers are coming in. So it's really good news for investors, especially who have invested in inner city or city. In terms of the investment potential due to this, right now, the market has still not slowed down, although people are saying it's slowed down. Still, there's a huge demand. Areas like Brisbane, Adelaide, Sydney, Melbourne, it's extremely strong, and finding land or house and land is still a challenge. And having said that, from the apartment market, it's going pretty well as well. The demand has caught up after tourists are moving in, students are moving in, and it's good times.
Do you feel that maybe with more tourists moving in, could we expect another wave, and perhaps the market will slow down a bit, or do you expect it to continue to grow?
I think
it's always growing, but it's the rate of growth, perhaps.
Yeah, no, I think the next big thing would be the interest rates, with the inflation going up as what it is right now. There's a lot of talks by the Reserve Bank, the interest rates will go up. And the moment that happens, historically, market will slow down. When I say slow down, it's not going to crash or anything, but it will slow down the way the pace which came in will definitely slow down. So we can expect the market to slow down towards the end of the year. But right now, we haven't seen that happening.
Right. So, you touched a bit on the interest rates possibly going up with the inflation. What are, I guess, with the interest rate, I guess, if people have invested, then it could become a bit of a concern that if they've invested too much into the property market. So what are some of the, the hot suburbs that people could look out for, where they might be able to pick up a bargain, so to speak, still perhaps a property that's, could be going under the median price of the area?
Yeah. Yeah, I mean, interest rates go up and down. I mean, right now we're at all-time low. Cash rate is at 0.1%, and you cannot go below that. So it's, I think it's unfair for people to think it'll go up and create a big ha-ho about it, because we are at all-time low interest rates. Even it goes up by 1%, it's not going to harm an investor so much. But at the same time, you've got to be smart about what you're investing in. And in terms of the suburbs to invest right now, there's really good suburbs still, especially Brisbane. There's multiple suburbs in Brisbane which are really, really good. In South Australia or Adelaide, there's really good suburbs to invest in. And even in Victoria, for that matter, especially the regional suburbs are still giving very, very good rental yield. And if you look at New South Wales, suburbs close to the new airport coming up, towards Beggars Creek, that part of area is, and the Hunter Valley region, those are really good areas to invest in still.
I guess in Victoria, places like Geelong are quite hot at the moment, and there's a lot of infrastructure spend planned for that area. There's quite a lot of house and land. I believe you still can pick up for below median price in some cases. And
Geelong as well as Ballarat has gone up really well. There's a lot of infrastructure spend, a lot of projects coming in. So employment is there, infrastructure projects are there, population growth is happening. So, I mean, as long as these three are there, you simply cannot go wrong.
Yeah. So I guess something that's been in the news recently has been the severe weather that we've experienced in Queensland and in New South Wales. But what we didn't see was, I guess, I mean, some of you may remember in 2011 there was a major flooding in places around Queensland and especially in Brisbane. But some of those suburbs that were really badly affected, their house prices, I mean, there was a bit of a slump at the time, but then, their house prices are more than double since then. So, I mean, again, going back to that, you can't lose with property, can you?
Yeah.
What's your take on that?
Yeah, I mean, you've got to be careful with media, right? When that's their job, when there's a flood or earthquake or whatnot, I mean, they create a huge hype about it. But as a property investor, you've got to be thinking that these floods are short term, but property investment is long term. So floods will come and go just like a rain, but as long as you're investing in the right place, you're not going to get hammered just because there was a flood in 2022. There's much more years to come, and then your property appreciation will grow as long as the fundamentals of property investment is there. So no, I don't think there's going to be impact at all. There might be impact for severe, I mean, if the properties have damaged, I mean, there's impact, obviously. In the long term, things will get back up.
And I guess investing in the right areas, I mean, you can always avoid the areas that are on the flood map. And, in terms of developing a strategy, like we could assist people.
No, exactly right. I mean, when we propose investment properties, we always look at, I mean, first we look at the country, then the city, and then the suburb. And then we also go into the location, and then things like flood maps, avoiding the flood prone areas, avoiding the bushfire prone areas. Those are fundamental things which we do before we propose something for an investor. So, I mean, as long as you take those precautions, but I mean, there's obviously unfortunate things do happen. Then again, as long as you have the right insurance in place, you can always come out of it.
Is there any, do you expect there to be any changes in terms of foreign investors, for foreigners to be able to invest in Australia with the changes of interest rates, or any changes on the horizon that you're aware of, or anything to look out for?
I think the foreign investments, foreign investors have, I mean, it has increased dramatically, especially after the borders opening up, because people could come in and have a look at it, whereas it used to be videos and different type of virtual expectation that we had to set. But now we ourselves see an influx of foreign investors coming in. I think it will continue to be because the borders have opened up. With the interest rates, I mean, if you look at the Southeast Asian countries, most of the interest rates are much higher than Australian interest rates. So having 1 or 2% even, if there's increase of that kind of interest rates, I don't think that's going to impact them, and I don't think that's going to be a demotivating factor for an investor in a foreign country.
And I guess, even from a foreign investor or local investor perspective, something that Australia has on offer is a stable market. Economic and political stability compared to a lot of other places that you can invest in. And certainly that's a plus.
No, definitely. It's, as long as we look at a long term, these are all short term things. Interest rates go up and down, floods come and go. But if you look at the long term, 5 to 10 year horizon, you simply cannot go wrong with Australian residential real estate, because simple fundamental is that we have only 25 million people, and there's so much land available, and there's so much potential for the population to grow, which will happen in the next couple of years because of the borders opening up all of a sudden. And as long as there's population growth, they need housing.
Yeah, most definitely. That brings us to the end of the questions that we've received.
All right, let's see if we have anything else on the stream here. Yep, there's one here, I think. I have 2 properties as investments, and I'm looking for my 3rd investment property. What sort of strategy would you recommend for my 3rd investment property? Is it a house or an apartment or a townhouse? Very good question. We would love to get some more details from you to see what sort of properties you have currently in place, what sort of equity you have in place, and also your personal circumstances, whether you're a high taxpayer or low taxpayer, so that we can really propose something for you. But depending on, for example, if you have 2 old properties, we might recommend you to go for, and if you're a high taxpayer, we might recommend you to go for a brand new property or an apartment, so that you can get some tax back from your income tax. And if you have already sorted out the taxes right now by purchasing 2 brand new properties, we might get you to invest in a cash flow positive property where you can get some passive income in place. It really depends on your personal circumstances. Please reach us out. We can have a strategy discussion to see where you're at, where you want to go, and then we can propose something to suit your circumstances.
And also just want to flag our next event that's coming up. We have a workshop happening in Epping, Victoria. So for anyone who's in the area or in Melbourne, in the surrounding areas, there's a workshop on the 24th, Thursday, the 24th of March.
That's correct. So we go all around the country. So if you look at Melbourne, we did something in Southeast last month. We have something in the north for focusing on the people in the north of Melbourne. It's at West Epping, in the heart of Epping, which is about 20-25 kilometers away from the city. Please reach us out. We can register you in. It's going to be a valuable session, mainly on property investment education.
And it's a free event as well. There's no cost to attend, and it's free to register. And look out for the registration details on our social media pages.
There's another one coming in, Saranga. I got a land tax bill, which was a surprise to me. How can I minimize my land tax? So each land tax is a state-based tax. If you're in Victoria or even New South Wales, if you have 2 or more properties, it's likely that you will get a land tax bill. For example, in Victoria, if your total property portfolio land value is exceeding $250,000, you will get taxed for land tax. So the best way to minimize that is to invest in different states, because it's a state-based tax, or invest in properties in different structures. You might buy something in your wife's name, you might buy something under a trust, You might buy something under a company name, and those will be treated differently. But if you buy under your individual name for 2 or more properties, you will definitely get caught to land tax. So there's few strategies in place. Again, if you can reach us out, we can have a distant conversation to see where you're at, where your properties are at, and then educate you on what are the land tax thresholds in each of the states, and then we can take it forward.
And again, all that information will be captured in the investment strategy that we'll put together, a customized strategy for each of our clients.
Correct. All right. I think that's about it, Saranga.
Great. Thanks, Navin. And thanks, everyone, for watching.
Thank you so much for listening in, watching. Hopefully you got something out of it. We'll see you again next week.